Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check the global markets overnight. Mostly weaker while commodities fell as the US dollar strengthened. Well, that was the story, perhaps more in Europe, because on Wall Street, the indices did pair earlier losses to end higher as data showed a further easing in labour market tightness in the US. Mega cap tech stocks, including Amazon, Alphabet, Nvidia and Microsoft, ended higher after losing ground earlier in the session. And the oil majors, ExxonMobil and Chevron, fell as demand concerns weighed on crude prices. Shares in Bath & Body Works fell heavily after a lower revision to its quarterly profit forecast. Axos Financial dropped after Hindenburg Research disclosed a short position in the lender. And Paramount Global ended lower after the media conglomerate said it was exploring strategic options or a joint venture for its Paramount Plus streaming service. Well, US job growth slowed more than expected in April, pushing the number of available jobs per job seeker to its lowest in nearly 3 years as labour market conditions soften. Job openings, which is a measure of labour demand, were down 296,000 to just over 8 million, and the increase in annual wages fell below 4% for the first time in nearly 3 years, with the average hourly earnings rising 0.2% in April, meaning wages increased 3.9% over the previous 12 months. And the data saw US Treasury yields fall to an almost 3-week low. The yield on the 10-year note fell to 4.33%, the 2-year down to 4.77%. And the US dollar increased from its more than 2-month lows against the euro, sterling and Swiss franc, the Aussie dollar trading at 66.5 US cents. Meanwhile, South Africa's rand has tumbled around 3.5%. Since it became clear that the ruling ANC party had failed to secure a majority in national elections for the first time since it came to power more than 3 decades ago. And vote counting in India's general election suggests that Prime Minister Narendra Modi's alliance is unlikely to win the overwhelming majority predicted, which has seen Indian stocks suffer their worst fall in 4 years as foreign investors sell down their holdings. All right, so let's get across what is moving macro-wise and how that's influencing equities at this point. John Blank, Chief Equity Strategist and Economist at Zacks Investment Research, joining us now. John, very good to catch up with you again. Let's start with the US economy. What you're seeing there, are we seeing a cooling? We have a raft of jobs data this week. What's it telling you?
Andrew, I don't think we're getting to cooling. I think people are trying to hope for cooling because that gets the Fed into the rate cutting game. But quits are back to 2019 levels. And by the way, 2019 was a very hot economy. So that's not actually cooling, Andrew. That's just getting back to a hot economy pre-COVID. So job openings still higher at 8 million than 7 million before COVID. So still strength there. So basically, I would tell you that these were all trend reductions that the Fed wants to see. They have, hope to see, and they're not anywhere near getting done with this. So I think, it's still a September rate cut for the United States. We'd like to hope for something in June and July from those two meetings. The meeting next Wednesday, obviously off the table in my mind, but, small chance of a July cut. But truly, I'm with the market that there's a 2/3 chance of a Fed cut in September. And this data doesn't change that much.
How does that influence what we're seeing on equity markets then? Given that resilience, that strength that we've seen for stocks?
Yeah, so we're at 5,200, 5,300 for the last month on the S&P 500. If I do a 2025 forward look, I can get to 5,400. So, I think we got another 200 points we can find in this market if we kind of, stagger through the summer correctly and get a rate cut in the fall. So I just think, low volume market, low VIX volatility market, A lot of weird day action, which most of the upside today was in the large mega cap stocks. Basically, nothing else is moving. And then you get the small caps are dead because they're rate sensitive, and the industrials are not moving anymore. So it gets down to just a few handfuls of stocks that are getting people excited about this AI situation, which is very real. And then you've got, Andrew, also the Q2 growth rate for the United States is now down to 1.8% with the latest emendations of the GDP Now forecast, which is also, not, it's trend growth. It's not cooling. So, we're going to be going sideways, Andrew. I think that's the basic point for this market.
Now, of course, you talk about the prospect of cuts from the Fed. More immediately, though, we are expecting cuts from both the European Central Bank and Canada's central bank at the same time. What's your opinion on what we're seeing there and how that's likely to impact equity markets?
Andrew, I think, we got to get back down into, I saw today the Mexican peso was, talked, like it was a disaster, but it's already trading at 17 to the dollar. It used to be 20. So there's been a ton of rate cutting down in Latin America that precedes what's going to happen in Europe. So we already know, for example, Mexico has been cutting 6 to 8 times. So it's going to be a very, premature signal from the ECB that will encourage the Fed for the September meeting. They will get in alignment with the Swiss central bank, which is already cut. And they're going to basically tell everybody, what we all know, that eventually we will get to 2%. And in a cooler economy, a lower growth economy like Europe's in, they can cut now. So I think, in general, it will probably be a good signal for U.S. stocks. I don't necessarily think it'll make a big move into the European stocks, because they're already at record highs themselves. So it doesn't make a lot of sense to me in that respect. But I do think people are starting to realize that it's probably going to be the case that the Fed's going to cut 1 or 2 times this year.
John, a lot of movement or action on in commodity markets at the moment. Those commodity prices certainly on the move. Oil for one. How are you seeing that market, I guess, as we move into the summer driving season there?
Yeah, Andrew, I do a modeling exercise and I update it every month. And my 12-month forward look for West Texas Intermediate is $74, and we're at $73. So what I see out of the market is, a little hot up in the 80s, recently. And it's coming back to where the market used to be thinking, even a month or two ago from a forward look. So I think, you're looking at an oil price that's super well managed, kind of interesting in the sense we know the Russians are evading sanctions and are probably offering discounted oil through the Greek tanker route. And this is the other thing. I think it also says there's just a lot of oil out there if you know how to buy it, reship it, repackage it, and get it around. So my view is it's been surprising with the Israel-Hamas war and the Ukrainian war with Russia that nothing's happened to oil. But it's another example just how easy it is in a global world to get around these sanctions. Basically what I think we're learning.
Now, John, you always come to us with 3 stocks. Let's take a look at the first one. Is in the energy space, not oil, but it is in power generation. Vistra Energy. What are you seeing here?
Yeah, Vistra Energy has got to be the most fascinating stock we've talked about in a long time, because it's not fascinating, Andrew. This is power generation in Texas. So, this, if you look at the chart, it's amazing. We have nothing but earnings misses for 5 years. So this stock it was a defensive stock, utility, electric power generating, standard stuff, renewables, natural gas, coal, things like that down in Texas. And then we see it middle of 2023 going from $20 a share to $100 a share in a year. A 5x winner in electric utilities in Texas in a year. So unbelievable situation. And what's going on here, Andrew, is these power generators in big corporate, places like Texas, where they have this independent electric grid, it causes them all kinds of problems. The bit is that AI's needs for electric generation across all those companies, across all those applications, across all those cloud server farms is going to be huge. So this is the thing. Andrew, I looked at all of our Zacks sectors. They're like the S&P 500 sectors. And the number one return sector year to date is utilities. So it just, what's amazing about this chart and what's amazing about this story is everyone, for at least for decades have think of utilities as a defensive stock, not a growth stock. And this is a classic pattern in a chart that's saying it's very cyclical and it's very growth oriented.
Yeah, well, utilities traditionally not exciting, but perhaps they are from an investment point of view. John, the second one you're taking a look at, Tyler Technologies. So this is software services.
Yeah, Tyler Technologies, probably a name you don't know about. They ran up during the COVID pandemic to 550. Now we're at about 480, and the target price back at 550, just kind of crawling their way back to the COVID pandemic. So what's interesting here, Andrew, is what they do. Why did they go up to 550? This was back in COVID, and everything got shut, including all the government facilities got shut. Courts, police, all these different schools, health facilities, everything got shut that was also governmental. So Tyler Technologies offers cloud software as a service to government. So they basically are another AI play. And this is another fascinating thing. What a big transformation could happen in our government functions with AI from the cloud. These guys they're basically a client of Amazon Web Services with their software. And, computer software services are super high, strong industry, one of our strongest, top 4%. And this is why, because what they did is they basically bought lots and lots of little companies all over the United States. They're based in Texas, but you look at the M&A list, it's all over the place. But again, you just think about it. I mean, what a transformation of productivity, improvement, and the way we do things in terms of just core government functions. So again, truly interesting. Government not thought of as a growth sector.
Yep.
Government customers not thought of as a growth sector. Tyler Technologies, a growth stock.
All right. And thirdly, John, just quickly, now this would be a name that's familiar with many Australian investors, Barrick Gold, one of the world's largest gold miners. We know where the price of gold has gone recently. What are you seeing here?
Yeah, well, so here's another story that, in the same theme, Andrew. Barrick Gold is obviously a gold miner, and everybody down there knows about it, but it's also a copper miner. It has huge copper mining. So Southern Copper, Freeport-McMoRan, and Barrick Gold are all getting big estimate revisions. This has got 17 and 25% estimations on the annual look going forward. So that's huge because we know part of it's the gold price, part of it's conductivity of copper. Copper is seen as this metal that's going to get a huge bid from these service farms into these applications across all the renewable energy, all the battery storage. So Barrick Gold is a closet copper play along with, the obvious ones like SCCO and Freeport-McMoRan. So that's the other thing I think here is really interesting about these three stocks. These are three very, material name, a utility name, and a government services software provider that are growth stocks.
John, terrific stuff. As always, thanks for joining us from Zacks Investment Research. All right, quick check of where we're likely to open. Marginally lower there, just off 4 points for SPY futures, and stay with us because the open is just a couple of minutes away.